So, if you've ever dipped your toes into the world of the stock market, you've for sure heard these two words thrown around: trading and investing. Now, they're both ways to make money, but believe me, their approaches are worlds apart. In this explainer, we're going to break down exactly what separates the fast and furious pace of a trader from the slow and steady strategy of an investor. So, it all boils down to this one big question, right? Which of these paths actually fits your goals, your personality, and frankly, your lifestyle? By the time we're done here, you're going to have a much clearer idea of where you might land. Here's a quick look at our game plan. We'll start with the absolute basics. Then we'll take a deep dive into the world of the trader, and after that, explore the art of the investor. Then we'll put them side by side for a little head-to-head before we talk about, choosing your own path. Okay, so let's get right to the heart of it. The entire difference between trading and investing really just comes down to two simple things: how long you're in the game, and what tools you use to make your decisions. Here's a simple way to picture it. A trader is kind of like a speedboat, zipping around trying to catch quick waves of profit from the market's daily ups and downs. An investor, on the other hand, is more like a giant cargo ship, charting a course to build wealth slowly and steadily over many, many years, sometimes even decades. All right, let's buckle up and dive into our first profile. We are entering the high-octane world of the trader, where speed is absolutely everything. The goal for a trader is super simple, at least on the surface: buy low, sell high, and do it as often as you can. Traders aren't really worried about if a company will be around in 10 years. They're obsessed with where its price is going in the next 10 minutes or 10 hours. So how do they do it? Well, a trader's favorite tool is something called technical analysis. They live and breathe these things called candlestick charts, hunting for patterns. The whole idea is that human psychology, fear and greed, creates patterns that tend to repeat. And each one of those little bars or candles tells a story. Green means the price went up in that period, red means it went down. They believe that by studying these patterns, they can predict the future. So, in a perfect world, the trader's dream, the analysis is dead on. They buy a stock at $10, they see a signal, and they sell it at 13 for a quick $3 profit. Then maybe they see another signal, buy back in at 11, and write it up to 16 for another gain. Sounds pretty good, right? But here comes the reality check. What happens when you're wrong? A trader buys at $10, but instead of going up, the stock tanks. To protect themselves, they use a tool called a stop loss. It's basically an automatic eject button that sells their stock at a preset price, say $8, to limit the damage. But here's the danger. You can get whipsawed. You get stopped out, you jump back in at $9, and it drops again. All those small losses can add up and bleed an account dry, fast. And the world of trading is incredibly diverse. You've got day traders who are in and out of the market before the closing bell rings. You've got swing traders holding for a few days or weeks. And this whole battlefield isn't just for stocks. Traders are in everything from currencies and oil to the wild west of crypto. Okay, let's all take a collective deep breath and shift gears completely. We're moving from the 100-meter dash to the marathon. We're talking about the power of patience as we explore the art of the investor. Investing is basically the polar opposite of short-term trading. This is all about buying a piece of a company, an asset, and then just holding on for a long, long time. The belief is that the real value of that asset will grow over years and years. So instead of staring at charts, investors use fundamental analysis. They're more like business detectives. They're digging into financial reports, asking the big questions. Is this company actually making money? Is it growing? Does it have a good management team? They're buying a piece of a business, not just a blip on a screen. Let me make this real for you with a quick story. Let's say you do your homework on a company called Wee Wee Shoes. You love their business model, so you invest $500. Over the next 5 years, the company does great. It even starts paying you dividends, which is just them sharing their profits with you. And after those 5 years, your stock is now worth 3 times what you paid for it. So let's look at the final numbers here. Your initial $500 grew into $1,500 just from the stock price going up. Plus, you collected another $100 in dividends. That's a total profit of $1,100, all because you were patient and owned a piece of a solid business. So, if it's that good, why isn't everyone an investor? Well, as the investing legend Warren Buffett famously said, nobody wants to get rich slowly. It's true. Investing takes a ton of patience. You have to be willing to ride out the scary market downturns, and psychologically, that's a huge challenge for a lot of people. All right, so we've met the two contenders. We've seen their different playbooks. Now, let's put them right next to each other in a final showdown to make the differences crystal clear. This table just lays it all out perfectly. You've got trading on one side. It's a short-term sprint, using charts with high risk for a shot at high reward. And on the other side, you've got investing, a long-term marathon, analyzing business health, with lower risk aiming for steady growth. You can see their goals, their methods, their entire mindset. They're just fundamentally different. So this all leads us to the million-dollar question. Which one of these profiles is you? Because this isn't about which one is better in general, it's about which one is better for you. I want you to be really honest with yourself. Do you thrive on action and adrenaline? Can you stomach high risk? And can you commit hours every single day to watching screens? If so, you might just have the DNA of a trader. Or do you prefer to plant a tree, water it, and watch it grow over many years without losing sleep over it? Well, that's the soul of an investor. But let me be absolutely clear on the single most important point here. It doesn't matter which path you're drawn to. If you jump into either one without doing your homework, without having a plan, you're not trading and you're not investing. You're just gambling. And in that game, the house almost always wins. When it's all said and done, your greatest asset isn't how much money you start with. It's your knowledge. So the real question isn't trader or investor. The real question is, are you willing to put in the work to build the knowledge you need to succeed? Because your financial future really does depend on that answer.